think what the government, the provincial government was trying to do was front load a bit of that money, maybe given the economic concerns, but they tried to sort of get 3 years worth of money out the door in 2 years. So while we budget to get 350 over 3 years, we're kind of getting it in 2 payments of 500,000 and 1 payment of 100,000 or something. So next year you're going to see that that number is significantly lower. But we still treat it the same for budget purposes. We have to show it as a revenue, but we hive it off into a surplus fund and we bring it back out the next year when we intended to spend it. So we try and smooth it that way. We wouldn't take all of that money in 1 year and use it for operations and then rely on only 100,000 the next year. That would cause a real flux in the tax rates if we did that. Sales of service, 221,000 versus budget 210,000. We're down a little bit of revenue in the planning department that is causing that. About $5,000 in planning fees and about $4,000 lower than expected for building permit revenue. And other revenue, 379 budget versus 412, which is what we received. These figures in here in the revenue consolidated statement of operations are provided in more detail on schedule, is it schedule 1? Schedule 1. And it's at the back, very back of your statements, and it's another landscape, document. And what this does is sort of detail our revenue. It breaks out those lump sum amounts, and I won't go through it for you because if you need to look at it, it really sort of breaks them out into much smaller amounts so you can see where our segments are. So we have like a general government and service segment. We have a fire department segment. We have our roads, like public works segment, planning, recreation. So everything is sort of done by department on this schedule 1. And our expenses, which again are detailed in that schedule 1. Note 16 really provides some significant information about general departmental expenses. And maybe we could just take a look at note 16 to sort of give some more information on that. Note 16 is on my page 25.
Turn to page 35.
Thank you. A lot of flipping going back and forth. Everybody got it? General government expenses were under budget by about $8,000. Administration expenses were over budget by approximately $38,000. Finance expenses came in pretty much as budgeted. Community grants, insurance, rent, and other general government expenses. Overall, you can see that we had budgeted to spend $1.316 million, and we came in at spending $1.317 million. So we were very close to what we anticipated. I want to draw your attention to fire and emergency services because it does look like it's significantly under budget, but that is a little bit misleading because of the, there's some of Brian Middlecombe budgets basically all of his expenses in as operational expenses. At the end of the year when I go through and I have a look at what he's actually purchased, a lot of those items that he purchases, they qualify as capital under our reporting requirements, which is public sector accounting board standards. So I go through and I spend a lot of time at the end of the year analyzing what he's bought, and I pull it out of his expenses and I put it on the balance sheet where in with those tangible capital assets. So this year, I pulled out about $12,000 that he had expensed that really technically qualified and was required to be capitalized. So take that number 262 and add it back with 12. His actual expenditures for his budget this year was closer to $276,000 was more. That's what he spent, but we just have to report it in two separate places on the financial statements. Bylaw came in very close, and other protective services, that's emergency management, very close to what we had anticipated. Roads, drainage, and infrastructure. This is our public works budget. We had anticipated spending $706,000 on operational type things. And again, looks like we only spent about $561,000. And some of those savings, revenue collected over expenses of $1.260143. Accumulated surplus, at the beginning of the year, this is the sum of our previous year's surpluses, $51,259,045, with accumulated surplus balance at the end of the year, $52,519,188. And again, I caution you, that's not cash available for us to spend.
Yeah, that's too bad.
Yeah, just write it down. The next statement is the consolidated statement of change in net financial assets. What this does is try to explain the difference between our beginning net financial assets position and our ending net financial assets position. And in short, this statement has indicates that our net financial assets are $558,106 better than they were last year. And it means that we're more liquid than we were last year by $558,000. We have more money in the bank and OBS. The last statement, the last statement is the consolidated statement of cash flows. And this statement attempts to explain the difference between your ending cash balance last year and your beginning cash balance this year. So all of the things and all the transactions that a corporation or an entity or a municipality does throughout the year use up or take in cash. So when we tax and we take in money, that's a source of cash. When we pay our accounts payable, that's a use of cash. The changes in things like accounts receivable, they're lower than last year. That means that we have more cash. We've collected more of our debts that are outstanding. Accounts payable and accrued liabilities, they're lower than they were last year. That means we've paid off more of our bills, so that would be a use of cash. In the end, the net decrease in cash during the year from December 31st, 2010 to December 31st, 2011 was $55,556. So that explains the opening balance of cash, $556,000, and the December 31st closing balance of cash, $501. So that takes us through the last statement. I didn't know if you guys had any questions about any of the note disclosures at the end that you wanted to clarify? Or any other questions?
Maybe Allison.
No, she doesn't.
I wanted to know if you guys had questions. Can't rely on me.
Yeah, we're relying too much on you. Does anybody have any questions of Kristen?
Yeah.
Besides, I'm just.
Does anybody else?
Besides, Councilor Morris. No, Councilor Morris, the floor
How
is yours.
much of the accounts receivable is the grant from the government?
For the sewer treatment plant?
Well, it is.
$860,000.
So half of that.
Yep.
So next year we'll have a even bigger.
Yeah.
Now, have we collected that?
We
yet?
are just about to get our last deposit in the bank. All we have to do is put the plaque on there. And we still have $30,000 actually that's outstanding for work that's going to be completed this year. But it's a pittance.
Can we get the signage done on Island?
I don't know.
Did they
We've got
specify?
our finance clerk looking after it, and she will
Okay.
get a fabulous sign for us.
You want to say it?
And
I was dreaming. That Allison was.
I've lost my note. Note 17.
Oh, that's why Christy's here. Christy loves wipers underneath.
It's exactly the same wording as it was in 2009, it was in 2010, and I don't know why I didn't think it was odd then. But we never include amortization in our financial plan.
We don't.
So the wording financial plan anticipates capital expenditures rather than amortization. So we didn't spend $3.2 million on capital expenditures.
No, that's a budget figure. 3.2 million.
Do we actually show 3.2 million for capital additions, or is that really capital additions plus contribution to reserves?
No, it's 3.2 million budget for capital additions. Okay. Yeah.
Well, what were we going to spend that we didn't spend? Because we only paid 1.8.
Right.
So what's the other $2 million that we were going to do that we didn't do in 2011?
I don't have it right in front of me.
I'll look.
Yeah.
Any actual figures that we're looking at?
Well, I have a feeling it's sort of a balancing number, but.
Is it what?
Well, it's got to add 684 from zero. The amortization number, the true number, I'm assuming the budgeted transfers from accumulated surplus was the transfers out of reserves and out of surplus.
Or the full bonds.
So if there's a little working paper that shows how that number was arrived at,
Okay.
could you send it to me?
Yeah, we can work on that.
Any other questions?
Well, the presentation was done really well, Kristen. You presented it in plain English and got through the difficult concepts really well so we could understand it. Thank you.
Thank you, Councillor.
I do have one more question. We don't do a segmented statement of financial position, so how do the water systems know what value of their assets are individually or their debts are individually?
What I like to do is put the, not the balance sheet stuff, but the operation stuff on the back of the annual water bill. It's something I did a couple years ago and then I got off it, but I want to do that again this year. As far as the segmented asset value, all of the net equity balances are in each system in their own separate segregated fund accounts. We don't do segmented balance sheets, but we should certainly be doing segmented operation statements. And if they wanted to know the net book value of their individual assets, we could certainly provide that on request. Yeah, we could certainly provide that on request.
Sorry, I didn't hear that answer.
If a local advisory committee wanted to know the net book value of their system's assets, we could provide that information as at December 31st of every given year. We certainly couldn't provide it throughout the year, but we could provide it as at that date.
And should that be part of the, or is it part of the?
It is not part of it.
On the financial system?
No, we report as a consolidated entity. And I assure you the amount of work that it takes to get this all together is a significant amount of work. It is helpful and useful information, without a doubt, to provide each water system with a year-end statement of, and we do that as a rule at the annual budget meetings for the water systems.
So I have a question. Just is there a reason why the auditor's report is 4 months into the new year? I mean, is it because we're not up to date in January with our December?
Traditionally, the auditor's report was dated the day that the auditors were here and did their field work, completed their field work.
Right.
And then new regulations came down in the accounting world that required the auditors to assert that everything up to and including the date the financial statements were accepted had been reviewed and looked at for accuracy and presentation. So the auditors actually do go and review subsequent transactions past December 31st. They'll ask for copies of bank statements and bank transactions right up till today, and the statements will be signed at the day that they are accepted by council.
So we can't, for example, this couldn't be done then in the first month or the second month?
To produce this set of financial statements? No, it really couldn't. What is involved in doing the balance sheet side of the accounting is very labor intensive. It's very, municipal accounting is very manual, it's very technical, and we can do the operation statements, we can do income and expenses year to date, but to get the funding side of that, because it's all double entry bookkeeping, you pay something with cash and you debit an expense. Well, there's also a secondary entry for all of those transactions that have to be made to charge what fund it came from and who paid for it on behalf. So in most cases, it's the general fund that pays most of the expenses on behalf of the water systems. So there's a whole number, subset of entries that go on all the time to balance the numbers owing between the funds. And it's, we can really just do the revenue and expenses year to date throughout the year.
Mr. Mayor, I think there's two parts to your question. One part is the actual audited financial statements, and the timing is reasonable for that. To have year-end financial results unaudited from that we would be able to see as council for operations, perhaps we might want to have a preliminary draft that might not be the final audited numbers in the end of February, early March. That might be a reasonable expectation.
Yeah, I wasn't necessarily, I don't want to put more work to the staff, but just wondered about the time. Anybody else have any questions? No? Should we?
Is Christy Kwan, our auditor, who's in the audience? Will you be presenting during the open meeting, Christy?
Is there a preference for open and closed?
Well, there's two.
Yeah, the general one I usually do during the open.
Yeah, and then the management letter account.
Yeah. I'll touch on the management letter though. Has the report to council been distributed?
It has, yes.
Okay, we do have final copies here. There were a few minor changes, wording and such, that were done just from the draft copy. So I've given Kristen new copies. And so I'll just kind of get into the spiel. So
what we got was not electronically. So Casey might want to hand out.
we actually have the finals here.
Are we talking about the financials or this?
No, for the audit's results and communications.
Am I the only one that's got a hard copy?
Yeah.
No, they were put in everybody's top.
Oh, I didn't know.
So did you, Kristen, did you work on the ones in the bag?
Yeah, I've got,
Yeah. There are additional copies that I bought with the final.
should be part of the agenda.
No, no, no. Okay, so I purchased one?
My slender hips don't be down.
This is your friend.
It's way too much information. Way too much.
What do we need to know? Oh, really? Color, we need color.
Oh, sorry, Casey.
Yeah. It says the same thing.
Yeah, we'll get it.
We'll send the electronic one.
Okay. Or is this it?
It's been changed, like just minorly, just a couple of wording and such. So the firm of BDO Canada performed the audit of the municipality, and we are planning on issuing an unqualified opinion for the municipality, which is the highest level of assurance that we can provide. We have also issued a management letter with regard to some items of significance, and it mostly addresses points brought up from prior year, and that's going to be in Appendix A in the letter that was just provided to you. The scope was unrestricted, and you were provided access to all requested items. and we received full support from Kristen, Karen, and the rest of the finance department, other staff we've contacted. As for independence, as auditors, we're required to assess our independence each year, and from the assessment that we performed, we noted nothing that would impair our objectivity in appearance or actual, or that will affect our independence. We did not detect any fraudulent or illegal activities or material misstatements resulting from fraudulent or illegal activities during our audit. Our materiality overall was 2% of revenues, so $144,000. And we have a new concept that was introduced last year called performance materiality, and that was determined to be 75% of the overall, so it was $108,000, and that's the number on which our testing and analysis performs, so we do it to a smaller level than materiality. And Kristen made my job really easy, and she went through the financial statements. One item I wanted to bring up is that we will be adding another note. It's a fairly standard note, and we're going to add it at the end, and it will have to do, and it'll explain that prior year amounts were reclassified to conform to current year's presentation. There were some changes made to Schedule 1, so it was more from a user pay perspective. It was a little bit more useful, and so we aligned the prior year comparatives just to make sure that it actually is comparative. So that will be added on the final unless anyone has anything against that. For the possible aggregate misstatements, there were no possible aggregate misstatements that we noted on the schedule this year, and the journal entries that were made when we were here for field work were either for reclassification or very minor in nature. And we were very pleased because municipal financial statements are very complex, especially with, Kristen just mentioned, the detail and the balancing and the funds. And the presentation is significantly different from any type of public or private sector that you would see. So we were quite pleased to have very few adjustments required. As I mentioned, there's a management letter in Appendix A. All of the points were discussed with management prior to the finalization of the letter, and everything raised in prior year was addressed sufficiently. And the new point in current year merely related to the documentation of a control. It wasn't that the control wasn't effective, it was just the documentation of it. And management's comment is in there if you want to see that, and they agreed to that. And we would like to thank the finance department for their excellent cooperation, namely Karen and Kristen that we deal with, and the rest of the finance department.
I would suggest we move to a closed meeting, and recommendation is that council move to a closed meeting pursuant to section 90.1C of the community charter.
Second?
Second.